Okay, so now let's move on to the main subject of my conversation today, and that is understanding structural shifts and the impact that this has on companies. So it's one thing to understand the current value of the business, and we use history as a guide, but we also want to understand the future of the business. So we have to assess what is going to happen to the future of that company and that industry. In order to do so, we look at structural shifts. So we know that the dynamics of world economies, regulation, competition, and the ingenuity of the human spirit are all subject to dramatic shifts and dramatic change. This leads to structural shifts, which then reshapes economies, reshapes industries, reshapes companies, and within that, we're looking for those game-changing events. Because in that event, the winners will grow in excess of GDP while the losers decline. So recognizing these structural shifts, we develop themes. From those themes, we look through the winners and losers and buy companies. We want to, of course, look for those that are going to win and avoid those that will lose. Determining these winners and losers, of course, has a dramatic and direct influence on the future prospects of industries and companies, such that the winners will gain competitive advantage, they'll see increased revenues, increased profits, and their asset prices will rise, while the losers will have a weakened competitive position. They'll lose market share, revenues and margins decline, as will their asset prices. The implications on the valuation in total are also profound. In this next chart, we see a typical company where the stock price moves up and down through a rather consistent valuation band, much like the Apogee Enterprises, selling at 1x tangible book at the bottom and 3 to 4x tangible book at the top. In that case, and with Apogee, there's no real structural shift in the business, so the stock will move up and down relative to the valuation band throughout an economic cycle. On this next chart, however, we see what happens when a company wins the structural battles. Not only do they see the rising profits, gaining market share, but the entire valuation structure moves higher. So you've heard us talk about trying to find the next bull market, and that's what we're in search of. Well, this is the picture that I have in mind when we're saying we're looking for the next bull market. The opposite, of course, is true for the losers. Not only do they see declining fundamentals, but their entire valuation structure moves lower and lower. So you see declining fundamentals and declining multiples as well. This is also known as the value trap, and certainly something we try to avoid like the plague. When looking at the sources of structural shifts, we have found that they are generally due to a combination of several things. Government regulations is probably one of the top. Globalization, demographic shifts, government policy shifts, change in the Federal Reserve policies, and of course the adoption of revolutionary technologies. So now let's walk through 3 of the structural shifts that we see, the themes that we have identified, and we'll relate that to portfolio holdings that we have, which in total represent about 25% of the portfolios. So beginning with the first structural shift, that came out of the housing crisis, as well as the Basel III and the Dodd-Frank banking regulations. The themes that we have associated with that are the recovery in the housing market and also the impacts that those regulations are having on the mortgage servicing industry. The second structural shift comes from advanced drilling technologies, the revolutionary technology that's impacting the energy markets. Our theme there is the energy renaissance, but more specifically the impact that that is having on several industries. And then the final structural shift is one with globalization and a technology evolution in the container ship business and the impacts that that is having on sea-based logistics.